Ladies and gentlemen, boys and girls, and children of all ages, we are back here live on the Investor Show. As you guys and girls already know, we got a very, very interesting topic for you with a very familiar guest of the show. We got Uncle James. He's back in the building. Uncle James is back, everybody. So today he's going to be in live as we're going to discuss. Can oil or will oil outperform cryptocurrency? My personal opinion, I think Uncle James is crazy on this one, but he said he wanted to come in and speak about it. But if you are catching this live, go ahead and share this with everybody. Tell all your friends and things like that. Also, drop a comment, tell me where you're catching it live from, and also go ahead and hit that like, subscribe, comment, and share button. And just in case if you haven't done so already, go ahead, hit the subscribe button, hit the bell icon, hit that like, comment, and share button. So without further ado, let's go ahead and bring in our guest. He's coming all the way. He's out there in New Jersey, the founder and the blogger at the Ridgewood blog, 40-year Wall Street veteran, great friend of mine and mentor of mine that I met on Wall Street I don't know how many years ago it's been now, 4, 5, 6 years, something like that it's been. But he's going to be talking about that today. Can oil, out of all things, will it outperform cryptocurrency? One of the hottest things. Without further ado, ladies and gentlemen, let's bring in our guest, Mr. James Foytlin. How you doing today, sir?
All right. I'll tell you one thing, Prince. All the time I know you, the intro is getting longer and longer. You have so many people that you've interviewed. It's like the intro is going to go 15 minutes soon. You're going to have a longer show just to get the intro in. So.
That is true. I try to bring in, that's an old one. It should be way more people in there, but I'm just like, I'm kind of noticing it myself. I can't add everybody into the intro, but that's a good thing. It's a good problem to have. At least, I could have a problem not having anybody. So
absolutely.
But for Uncle James, for people out there who are not familiar with you, can you tell people a little bit about yourself?
Oh, okay. I worked for many years on Wall Street, from like the 1980s all the way to 2008. I had a business at the time, sort of like it was kind of like a trading firm. We just did trading for a lot of small investors, some smaller institutions, but generally small investors. And I sold out in 2008. And believe it or not, I missed Wall Street. So over some time, I got a tour license and I started doing tours on Wall Street because it's a fascinating place. Not only is the finance really interesting, but the history is is very interesting. And that's where I met Prince on a tour. And he was so impressed with my breadth of knowledge that he was foolish enough to ask me to go on his show a couple of times. And usually we blow up the internet when we're on. Today, I am serious. I have brought the yellow pad. So those of you who know are old school like me, when people break out the yellow pad, like if you ever go to a lawyer, usually they take out the yellow pad. That means it's serious, whatever you're saying. So today I have the yellow pad with me. And just one more thing, and then I'm gonna stop talking. But I just want to show you as a joke. One of my old Wall Street buddies. This is what happens when you work on a trading floor for many years with people, and they never give up giving you a hard time. So one of my Wall Street buddies sent me this because they knew I was going to be on the show today. Crypto investing for dummies. So, he wanted, because he knew at the beginning I was very cool to the idea of particularly Bitcoin. I thought I'm very interested in blockchain, but I wasn't. The idea of trading the currencies I was the coins seemed a little more like Amway was in 1980. It was kind of like speculative fever, I thought. So yeah.
Now I got to go ahead and give this to you. And James, that is true. I will say. When I was at Warren Buffett's office, he had a lot of yellow notes and yellow pads that you're talking about. So,
what do I tell you?
It's very true.
I'm trying to get you to,
So when I came home, I brought me a bunch of yellow pads and I write random stuff on them and I throw them all over my office to look important. They look like, this guy's studying. Yeah,
Exactly. Exactly.
Okay. Now, James, let's get into this craziness you're talking about here. Enlighten us. You're talking about oil outperforming the hottest. Well, cryptocurrency, which is the hottest, well, one of the hottest asset classes that we have so far, 2021.
Yes.
You're talking about oil, which is almost like the dying sport. It's going to outperform cryptocurrency in 2021.
Yes.
Let's hear it, James.
All right. Well, let's talk about cryptocurrencies, because one of the things that got me really excited about this week is on March 3rd was a gentleman's birthday. His name is Charles Ponzi. And many of you recognize that Ponzi name, and you say, well, I've heard that name before, because you recognize something known as the Ponzi scheme or the pyramid scheme.
Mm-hmm.
Now, many people know Charles Ponzi because of that, but I'm here to say that Charles Ponzi is also probably one of the founders of modern finance, the way banks and way governments practice finance nowadays. Mm-hmm. So, interesting enough, in 1935, I believe, the Social Security Trust Fund was patterned on a Ponzi scheme, and many other things, the way the government works. And this is not to imply that somehow the government was doing this to trick people. Many other things are also patterned on this pyramid scheme idea. Don't kid yourself. A lot of pensions, even corporate pensions, to some degree, are predicated on the idea that when you retire, 2 guys are going to be paying your retirement, or 3 guys, or 4 guys, or 5 guys. As long as more people keep going in the system, the people who are retired are fine.
Well, hold on. I want to get this right. I know who you're talking about. I think his name was Charles Ponzi. He was out of Charles Ponzi. So when everybody hear the word Ponzi scheme, Ponzi was a real person. So it was Charles Ponzi, and he was out of Boston when he started, right? And so, I do my research, James.
Yeah, you're on it. You are on it here.
So you are saying that Charles Ponzi changed the way that we do finances, because now a lot of the financial things that we depend on is built behind a Ponzi scheme. Is that correct?
To some degree, yes. Now let's get into this is why I bring this up, because this has to do with Bitcoin. Okay. Now, as many of your probably long-term viewers know, early on I was very cold to the idea. I even called it Bitcoin, I think, for a while, and I got a lot of grief for that, and including from some of my friends who were like, "You're just missing the boat on this one, buddy," and they were amazed, because I was the guy with the internet in 1994 that was going crazy, and they were all looking at me like I was nuts then. So now they were like, "You're going to miss the boat on this one." So why do I bring up Charles Ponzi and Bitcoin? I've been studying Bitcoin since I was on the show, really, and a lot. And I need a trading pattern. I need to know, when I trade anything, I need to say, hey, it goes up when this happens, it goes down when that happens. I'm oversimplifying, but I'm looking for, at least I want to think I know what the cause and effect is of the movement of that particular asset class. Sometimes you think you know and you don't really know, or you think it works a certain way and you find out later on that was totally erroneous. But so I've been watching it for a while, and I've come to the conclusion, like a lot of other people, that Bitcoin, let's just focus on that one and keep it simple, trades like a commodity. It basically trades like a commodity. There's, it goes up and down with demand, supply and demand. And why do I bring that up? Because it's also become an index for what I would call, to some degree, global stupidity, or this Ponzi element. So what's going on now that creates this? We have we're getting a new stimulus package, and a lot of people under a certain income are going to get a nice big check, and they're going to be really happy with that. And so are a lot of retailers like Walmart and things, because they're going to be waiting for you. They're going to make sure you spend every nickel of that. Okay. Mm-hmm. So, but basically, what are we doing? We're just printing a whole bunch of money and we're throwing it out at people. And we're not only are politicians sending, say, you and I a check, but they're sending countries checks. They're sending money all over the place. They're sending money to states. They're sending money everywhere. Now, where is this money coming from? They're printing it. The Federal Reserve is printing it. And our Fed chief, who has me quite concerned, Mr. William Powell, I guess is his. He's basically
Jerome Powell.
Jerome Powell, sorry. William Powell was a movie actor. Anyway, Jerome Powell is basically, it reminds me of the 1970s. He's like, no, don't worry about inflation. We're just going to print like crazy. And the theory that they're working under is if we print a lot of money, that money is going to get spent. And that's going to get the economy going. And now our new president has appointed Janet Yellen, who was kind of known as the queen of quantitative easing, or QE, as it used to be called. That got too complicated to explain to people, so eventually they started calling it helicopter finance. And what does that mean? That means you fly around in a helicopter with a bag of money, and you throw the money out the window as the helicopter flies. And hopefully guys like you and me, when we're on a tour, we're going to pick up that $10 bill and we're going to run to Starbucks and buy a couple of coffees, or we're going to spend it on, we're going to take the wife out, or we're going to do something. So that's the idea. The idea, again, is just print money like crazy. Don't worry about the consequences. Get people to buy and sell, and that gets the economy moving. That generates tax receipts, and then we can, you'll get the money back through taxes. Now, I look at all this, and I think there's a limit to how much you can get away with. And what particularly scares me is both Mr. Powell and Janet Yellen.
Let me say this, James. So Jerome Powell, we know he's the Fed chair, and Janet Yellen, she used to be the Fed chair. Now she's Secretary of Treasury. Yes. I want to ask yourself this question. They did the same thing back in 2008. They did the same thing back in 2000. Yes. Lower interest rates, passed a bunch of stimulus plans, and hey, we made it through. Why do you think? What's the problem? I'm not saying we're not going to make it through. What I'm just saying is the net effect of what really happens when they do this. And like any other thing, in the old days, the Fed would cut interest rates to kick up demand. They'd lower the rate they would charge banks, and therefore banks would then lower their rates to the consumers or to corporate or consumers. What happens as a policy tool is eventually interest rates get so low that becomes not effective anymore, because if you're at 1% interest and you go to 0.5%, it doesn't really do a whole lot. When you were like in 1977 and interest rates were 17% and you lowered it to 11%, those were huge cuts in interest rates. It magnified the effect of that dramatically. So what's happened is we've done this trick over and over again. And we're starting to, when I look at the total debt and I look at the opportunity to pay back that debt, we seem to be sort of at the diminishing return of this being effective. And what I see, what's generally going to happen, and what's happened in 2008 is, what did everybody do with all that money the government pumped in the economy? They bought stocks. Yes, right. And what are they going to do now? They're not going to go to Walmart. They're going to buy stock, especially people who watch your show. They're going to take their check and they're going to stick it in their IRA, or they're going to buy a stock, or they're going to do something with the money. They're going to invest it. You know what, James? Let's give a round of applause for that, for James, for saying that people that tune into this show has a high IQ and they will be investing their money.
Hey, that's it, man. You have a great audience, and so people, that money now is probably going to go in another asset class, is like Bitcoin. And Bitcoin, the more fiscally irresponsible the United States is among other countries, the more Bitcoin is going to go up. A lot of people are saying it's an inflation hedge, but I just think it's like an irresponsibility index. And there seems to be this feeling now that irresponsibility is the new normal. And so we're just going to go crazy and print money like crazy and not worry about it. And smart guys like your audience is going to buy stocks with the money. Other people are going to go to Walmart and buy that big TV. And I might even go to Walmart and buy that big TV, actually. But this is why Bitcoin is rallying. Now, it's already made a huge move this year. Like, as you pointed out, let's go back to the election. What was it? 12,000 maybe?
Yeah.
Right. And now it's like 56. I don't even know what it closed today. Right. Okay. So now let's get to oil.
By the way, James, it never closes. It's a 24-hour market. So.
Right, it is right. I know. And old timers like me, we don't get it. We can't. We don't know. You got to sleep, even though we didn't sleep much, especially in a lot of the certain times in the 80s and 90s. We didn't sleep really that much at all. But the market at least gave us a chance to, catch our breath once in a while and reevaluate what was going on.
And I want to let everybody know, I mean to cut you off, James, but let everybody know James has been around since the 70s, 80s, 90s, 2000 on Wall Street. That's where I met him at. So that, that's why I hold truth a lot to what he says. But go ahead, James.
So now let's get to oil. So what's going on? We've had a transition of power here in the United States, and we had our past president was very much a believer in energy independence for the United States. And interesting enough, 4 years of the past of Mr. Donald Trump, we didn't have any wars in the Mideast. We did a bunch of stuff. It seemed like Israel and a lot of the other Arab countries, except for maybe Iran, were all kind of getting along. It was surprising. I think a lot of the Arabs were pretty surprised about it as well. What happened? Fracking increased. The U.S. became, by the end of the Trump administration, the U.S. became a net exporter of oil. Shocking. First time in a very long time. So now what's happened? We have a new president in, and he's into what's euphemistically known as the Green New Deal. And what does that mean? It means we don't want to use fossil fuels because they're dirty and maybe they can't be replaced. And eventually we're going to run out. More importantly, what he wants to do is use things like windmills and solar energy to replace a lot of fossil fuel energy creation. Mm-hmm. And well, that sounds great. You have a couple of problems. One being, can that really happen? And two being, for example, if you have 1 million barrels of oil a day, say that New Jersey uses, how many solar panels do you need to replace 1 million barrels? I don't know if there's enough land in New Jersey. Like, I don't know if you could really, can you fly a plane with solar energy? Could you fly a 747 with solar energy, right? Could you fly a big plane with solar energy? I think there's limitations. Like everything, there's limitations. Everything has a plus and a minus. And I'm not bashing alternative energy. I'm just pointing out obvious things. If you've been around a while, you see this stuff coming. So let's get it straight. Right now, the total global oil demand is 96.7 million barrels a day. And the oil business calls it MBPD. I love those acronyms. Like, don't you like those stupid acronyms, right? So I call it million barrels per day because I hate those acronyms. Like, they started doing that in the 80s and it drives me crazy. The amount of oil production in the entire world is 93.6 million barrels a day. So that leaves us a shortfall of about 3 million barrels a day, which by historic standards is enormous. And what is that going to do? That means, and now we have a president who has asserted the Green Deal. So he's saying, well, we don't want to use fossil fuel. We're going to cancel the Keystone Pipeline. We're going to limit the amount of oil leases where people can lease federal land to drill for oil. So we're going to cut down on the amount of possible discoveries. And what else are we going to do? And we're going to push all this alternative energy. So when I look at oil, all I see is the price going up like crazy. And on election day, oil was around $32 per barrel. And today, even though it was down a bit, it is now $65, almost $66 a barrel. So it's more than doubled.
Now, James, I got to say this, right? I'm a big person where I believe that green energy, like you said, President Biden came in. He said, hey, we're doing a green bill. We sitting in California where the governor is saying that, hey, we're going to cut out green, not green energy, but we're going to get rid of gas stations. They're getting rid of the sale of gas vehicles. Yep. Every piece of new technology I see that comes out is relying less and less on oil. Everybody seems like they're trying to move away. Now, granted, yes, oil on election day, when President Biden walked in January, got the inauguration day. Yes, oil has had a great run so far. And a lot of people are attributing it to what happened down in Texas, when they had the big ice tundra that happened, that kind of spiked oil up.
We had a lot of snow in New Jersey too. Nothing bad like Texas, but we had about 2 feet here in about 3 weeks. So it was crazy.
And I believe oil will have a place, but all the indicators, when you look at the policies, when you look at technology,
right,
everybody is trying to move away from oil. So, James, how can you sit here and say oil, not only it has doubled, it's going to outbeat the hot cryptocurrency?
It's going to go to $100 a barrel.
It's going to go to $100 a barrel.
At least. And I'll tell you why.
Go ahead.
Okay. So here's the punchline. So you're trying to substitute fossil fuels for all those alternative energy. But what is the practicality of that? Again, how many windmills do you need? How many solar panels do you need? And if you have electric cars, where does the electricity come from?
Batteries.
Right, but how do you charge the batteries?
Charging station.
Right. So where does the electricity in the charging station come from?
Sunlight.
I think you're probably going to find that a coal-fired power plant is probably where it's coming from. But so you even if your theory is totally correct, we have this transition period. And what are we getting hit with now? We just had COVID for a whole year. And a lot of economies were shut down. People were locked down. But now we have 3 pretty good, as far as I can see, vaccines. We are coming out of that lockdown. Some states like Texas, Florida, Oklahoma, Alabama, Mississippi are open. They don't even require masks anymore. They're totally open.
1 second, James. I want to say what some of the people in the comments, I was kind of showing them. Al says, smooth shirts. Thanks, Al. Max B said, Uncle James, how are you? William is checking in from Toledo, Ohio.
Okay.
Jonathan says, Prince salute from Charlotte, North Carolina. And Michael says, I'm dying. You say a dying industry outperforming the goal of the future. I got to hear. Okay.
Well, what I'm saying is now we're getting hit with what we're getting hit. You're having you're having the transitional period of, if it can really work, from fossil fuels to Green New Deal, which takes time. Yet we just went from a period where everybody was locked down, where suddenly everybody is working again. For example, I have a friend who has a restaurant locally, and she basically laid everybody off and just worked with her mother because they did takeout only. Now, because the graciousness of Governor Murphy in New Jersey, she can now be 50% opened in capacity. So she immediately got on the phone, and guess what? Some of her ex-employees aren't working anywhere else, and they're like, "I'll be right back. I'll be there in 5 minutes. I'm ready to work. I want to work." And they all shut. So suddenly they went from not working at all and maybe getting an unemployment check to now they're working full time overnight in like seconds. So the demand has jumped, and is going to jump really dramatically over the next 3 or 4 months, I would say, or at least the next 2 months, like crazy. So you're going to have a tight oil market in a transitional period where you might be transitioning to alternative fuels. That's the policy. And that's going to be hit like a tidal wave of demand because everybody's going back to work.
That's a nice point. I will give you that. I can see that. Y'all can comment, let me know. James is making a point there. A lot of people will have to go back to work.
Yes.
Right. So you have, when we get back to open up the economy, we just seen Lyft reported it had its best week ever. So think about things like Lyft and Uber and transportation. I can see the correlation with making a lot of, James, you're making a lot of sense on that. I will give you
airlines. Don't forget airlines.
Airlines, that's true.
Right. I have a friend who lives in Texas, and I have another friend who lives in Tampa. And my one friend in Tampa just got a new apartment. I sent her flowers. It would have been cheaper for me to fly to Tampa with the flowers under my arm, deliver them, and fly back than to send them in that 1-800-Flowers. That's how cheap the flights were. I don't think that's going to last that long, but it does. A lot of people are going to fly. That means those airlines are going to use a lot of fuel all of a sudden in a real hurry.
The entire travel industry, people going to go on cruises.
Yes,
so people are going to go on cruises. People are going to get back in the airline. starts to open back up, the dependence for oil will increase. Is that what you're saying?
Yes. And on top of that, because it's the only thing here right now, how long is it going to take to build all those windmills to generate the power? It might take 2 or 3 years, but the demand is going to be there within a month, maybe less. Now, another issue that I realize there's changes. Like, I think instead of the Green New Deal, what's going to have a much bigger impact on fossil fuel consumption is the fact that a lot of people are still going to do remote work. Remote work is here to stay. A lot of people are going to do remote learning. Remote learning is here to stay. It may not be the only option, but it's going to suddenly become a very big option, because a lot of businesses are going to see, hey, we can save a lot of money on real estate, and we're going to need to save money somewhere because we couldn't make any money for a year. And a lot of people and a lot of institutions of higher learning are going to say, well, maybe we'll have online only courses and we'll charge a little less money, and but we can have a lot more people do online courses. We can have 1,000 people take an economics class instead of 50 people. Mm-hmm. And so maybe we'll just make it up in the volume. And so there's going to be a lot of changes in society, but I think temporarily there's going to be this gap where huge demand is going to meet limited resources. And oil prices are rocketing, and many oil stocks are up significantly, not as much as Bitcoin, although I can think of one that maybe by the end of the year might be up more. And you're starting to see a lot of action. Now, one of the interesting things is that, well, Mr. Biden in the campaign talked quite a bit about getting rid of fracking. I haven't really noticed much talk of that. That's been kind of quiet, unless I missed it. But I haven't noticed anything. The one thing that was a little disturbing was the canceling the oil leases, because they don't want anybody to lease. They're not leasing any federal land for any new drilling, which automatically puts a limit on the amount of oil that anybody's going to find anywhere. And I think I see your point. Like, I would buy a lithium stock. I think batteries are really impressive. The problem with batteries is, if you go all the way back to Henry Ford and John D. Rockefeller, the same battery electric car that they built in 1900, except for maybe the styling and the speed and the size of the batteries pretty much work the same. They're not that batteries they've advanced recently more, but it's one of those. It's like if you buy a computer now, it's faster and more powerful, better camera, better this, better that, but you can probably still use a printer from 10 years ago, because the printing technology just hasn't advanced as fast. It's much slower in its advancement, right? So I think you're seeing like you may be right. I have my doubts we can build enough windmills to replace it, and I think very quickly people are going to figure this out.
I want to put up this what's up, Jonathan? There, he's from North Carolina, and he's making. Oh, we got two people. One from North Carolina. Miss Nicole here is from California, and
I like her picture on her. Did you notice her picture?
Yes.
Sorry.
It's Nicole Young there. Yeah. And Clarence Duncan here. He's from Orange County, Florida. Now, Jonathan brings up a very good point. I'm thinking what you're telling me. He says, since they are shutting down so many oil companies, which oil company is ideal to invest for long term? And what it sounds like what you're telling me, you're saying for the short term, oil prices will go up, but for the long term, you may have green energy. So for this short-term bounce or demand for oil that would increase, because gas prices usually go up in the summertime as people travel more.
Right. And if you've noticed, gas prices are up in New Jersey. They're up almost 80 cents a gallon since November. I was buying gas at $1.99 for regular, because I'm from the 70s, so we always watch the pumps. Like, the pump is everything. It's like if you grew up in the 70s, your life is determined by the price of gasoline, even if it has nothing to do with anything. And it's ingrained because of gas lines and things like that. So it was $1.99. I put gas in the car the other day, and it was $2.76 for regular. So almost 80 cents, like 76 cents. And I think AAA says it's up 80 cents a gallon, but they buy more expensive gas than I do. I know all the cheap stations. So I'm one of those guys who rides around with those apps and goes, "Oh, this is the cheapest gas." So I drive 30 miles to get the cheapest gas. It's like I'm one of those, right? It's from the 70s. When you grew up in the 70s, you look at gas prices go up and you're just like, "Uh-oh, here we go." It was a generational shaping event.
Okay.
Go ahead.
What you got to say? What are some oil companies or oil stocks?
Well, it's interesting you mention that, because I would say for most novice, smaller investors, regular, I wouldn't try to be smart. I just stick with the big names. First of all, I've heard some weird rumors about Chevron and maybe some big mergers. So Chevron might be an interesting one. It's already up a lot already. Exxon, obviously, because you're going to get big dividends out of these too, as well as Exxon. You haven't kind of gotten as much of a move, and Royal Dutch Shell is one. It used to be an old favorite of mine. I noticed that's up quite a bit, but not a real lot. But there are other alternatives that you could play that are a little more interesting, that are more like pure oil plays. For example, there's a stock called BPT, which is Purdue Whole Bay Trust. And if you know anything about Alaska, the Purdue Whole Bay, I'm probably not pronouncing it right, is where most of the Alaska oil is. And about the trust basically has the lease on that oil. So all the oil that gets pumped out of there, the trust makes money if oil is over a certain price. And what the trust generally does is, if oil hovers over $52 a barrel for an extended period of time, say a quarter, they'll start paying out the money they make in a dividend. And when they pay out that dividend, the dividend will grow as oil prices go up, and so does the price of the trust. Now, if you look at it at 488, if you do a 5-year chart, you'll notice it was about $70 not that long ago.
Yeah, it was.
Yes. Yes.
Okay. I see it was, I think its peak was about $36 in 2018. This is stock symbol BPT, the BP Purdue Whole Bay Trust. Right. It's $48. It went up 9% today. Okay.
Yes.
So okay. So
now what you're
decline. What's going on with that, James?
Well, you had this is the other reason I'm hot on oil right now. And when I was on your show earlier before the election, people were asking about airlines and oil stocks. This is how perceptive your viewers are. They were saying, hey, these things, like the Warren Buffett idea, you buy value, so you look for things that are industries that are really knocked down. And maybe Exxon is not a $60 stock, but it's probably not a $20 stock. So somewhere in the middle, it's kind of like an easy way to make money if you're scraping off the bottom of a quality company.
Well, wait a second, James. I will say, looking at the YTD chart, the year to date, I think it was at $2 at the beginning of the year.
Yes, yeah, that's what. Yep.
It was at $2.68 at the beginning of the year, and now it has doubled. It has gone up 100%.
Yes.
And so far this year, compared to the S&P 500, which is up about 5%, NASDAQ is a negative. So far this year has been a strong year for oil so far.
Yes. Now, what I'm looking at is that stock to go up significantly higher and pay a monster dividend. The dividends used to be huge. They would be like 10% on the thing. And it will go, I think it's going to kick out. And it's going to...
Dividend yield of 33%.
Yeah, that's what I'm telling you, because over $52 a barrel, it pays out all the money it makes in these big dividends. It's not really a company. It's just a lawyer sitting in an office with a piece of paper that says, I own the land that the Alaska oil is underneath. And anything that comes out of that lease, he's like counting the oil that they're pumping out. And interesting enough, at one point, they were worried that they were going to run out of oil in Alaska. It was a declining asset; it was shrinking. But about I can't remember whether it was 5 or 6 years ago, or maybe it was 10 years ago. They because of a lot of new technologies, they realized there was significantly more oil there than they had originally thought, and I mean significant. So they had a huge write-up in asset value, and then that thing just, I mean, it was beautiful for a long time.
Right. We're looking at, for people who are just tuning in and maybe coming back catching the stream. This is what we have pulled up on. We're sharing our streams. This is BPT. This is Bravo Papa Tango. That is it's $4.88. It's profitable, and it got a dividend yield of 33%. That's crazy.
It maybe not right. Probably it paid no dividend the last year or so, but it will at over 52 a barrel, which we've been for quite a while now. If we can get a whole quarter in, they'll all of a sudden announce they're going to start paying a dividend, and the stock price will go up right away on that, because it always, at least that's what happened in the past. Now
it's up 100% so far. Now, was this something you did back when you was in the industry? How did you find this?
Yeah, this was a stock I stumbled on. Oh boy, we used to own, at one point, oil was like a hot thing, and we owned a lot of oil tankers. What happened was I had a client who was in the oil tanker business, and there was a bunch of big companies that leased oil tankers, and when business was good with the oil industry and they were shipping oil all over the world, there would be like a shortage of oil tankers, and the prices of these things would go way up, and they were basically set up similar to this, where they just pay out everything, and all the profits would be paid out in dividends. So they pay these giant dividends. And so sometimes you had like certain like income investors who'd find these very attractive. So from that and doing a lot of other research, I stumbled on this thing almost by accident. And you're probably talking 20 years ago, and or maybe 15 or something. It's a long time ago. And I would say recently after the election, I'm going to tell right out, because I want to be honest with the viewers. This is a stock I own quite a lot of, and I bought it much lower than it is now. And my view when I invest now is I look for these home run investments. I'm not buying a stock for $1 and selling it for $1.50. No. I'm buying a stock for $1 and I'm going to sell it for $100. I'm looking for huge returns. And so sometimes they take a long time. Like this could be 2 years you could be in this thing. It's not this is not a trade. This is like what I would consider even at this price, it's a relatively, it gives the appearance like you're going to get a relatively high return at a very low risk level. See, you could buy Bitcoin right now at 56 and it might go to 100, but it also might go back to 19. And so there's a lot more volatility in that. The risk level is enormously higher. Now this, like as some of my old Wall Street friends would say, what's the worst that could happen? You could lose $4, right? Like it just go back to it can go to zero. So you just lose $4. So, but the risk level, and that's one of the things I like a lot about the oil industry right now is you're bouncing out. No one's talking about oil at all. Like even the oil industry isn't talking about oil. Exxon is busy talking about how they're going to be an alternative energy company and things like that. It's like it's happening right under everybody's radar, and nobody's really paying a lot of attention to it. And whereas, and you know me for a long time, you know that when everybody gets bullish on something, I get really nervous. And that was another problem I had with cryptocurrencies, is suddenly all of a sudden Goldman Sachs and JP Morgan and Jamie Dimon, who bashed crypto really bad, is suddenly on the bandwagon. Everybody's jumping in, and what's his name? The guy who worked for Trump for like 3 hours, who got fired, 3 hours, Saramucci or whatever his name is, right? He all of a sudden he's going crypto mania. He's starting a fund, and I'm like, oh no, here we go, right? When I see that, it all of a sudden when Wall Street hypes something a lot, it usually either means they're in it at a much lower price and they're looking to sell it, or they're shorting it and they're looking to stomp on you for whatever reason. Or there's always something. There's like they play this big game. The whole thing is like a big circus. So that's made me nervous. But I do see the value in it as like an index on irresponsibility. Fiscal irresponsibility.
So fiscal irresponsibility. You're saying that, hey, as we live in a very low interest rate society, and we're just throwing out stimulus checks, and we're not going to pay out the debt. Let's be honest. Nobody has talked about paying out the debt,
and it's low now because right now they're still playing the game. There's no inflation. I don't see anything. I'm like, have you been to the supermarket lately? It's like $9 for a pound of bacon. Like, I mean, I don't buy. I wait till it goes on sale and I fill the freezer full of it. But I like, I love bacon, so it's like, and it is true. There's nothing you can eat in the entire world that does not taste better if you add bacon to it. It's like the ultimate. It's better than salt and pepper. It's like, just add it to everything, and everything will be better. Even salad tastes better with bacon in it.
Bacon, that's true.
Yes.
Now, so you believe as we become more physically irresponsible, you will see a rise in cryptocurrency?
Yes, and it's also, a lot of stuff is going to happen, because this is what happened in the 70s. It started really slow and took a long time to get going, but inflation starts to build up over time. And maybe the inflation rate that they're reporting right now is 1% or 1.2, and they're saying, oh, that's in the Fed target, blah, 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 blah. But they're doing an awful lot of printing. All this stimulus, all this strong money all over the place is just, it is going to, and all this debt is going to start to ratchet up interest rates. If you look at the bond market, rates are starting to rise. Now, they're still really low, so I wouldn't.
What do you think is pushing the interest rates to be?
Oh, the huge debt, the borrowing, the government debt is definitely, I mean, it's huge all over the world. It's not just here, it's huge. And what's funny is unlike the 70s, though, there is a big counterbalance, because a lot of companies, like, for example, Apple Computer, have enormous cash hoards. I mean, like 200 billion. Like, Apple Computer has more cash than most countries do. And I mean, they don't. It's not like in somebody's office sitting there and they sit on it. You know, they dance around. You know, like you go to IKEA and they have the bubbles so your kid can play with the balls. Well, Apple has a room where there's just money in it. You go in there and you swim in it and stuff. And like, I don't think that's true. I'm kidding.
They're only about $120 too.
Right. But there's a huge amount of cash in there, in that stock price. And there's a lot of companies like that do have a huge amount of cash. So that is a little bit of a counterbalance. There's also all this new technology coming out. So, for example, just like you were talking about with I'm more of a believer that lifestyle is going to change consumption. So if more people work remotely, it's less commuters, less drivers, less this, so that cuts back. It's just like we have LED light bulbs. And when they first came out, they were crazy expensive. Now you can go to Home Depot and buy a box of 8 of them for like $3. Like, it's nothing. Mm-hmm. You know, but at one point originally it was like, you're like, who's going to buy a $50 light bulb? Like, yeah, good luck with that. And
let me say one thing. So essentially what you're saying is you believe we are ahead of ourselves when we look at green energy, because you're saying, hey, we don't have the infrastructure. We got so much further to get, you know, we're thinking 5 years in advance.
Right. And yes,
now,
and we need the power. Like, what did Texas need in the snowstorm? They needed power right now, not 5 years from now. They need it right now. And if you've ever sat in a cold house in the dark, you know what I'm talking about. You know, it is not fun. Even for a couple hours, it's not fun.
You got a question here. I can't say that's Dayton, but he says, where does one put their money? An index fund, ETF? How much? Like if it's the VX, AIX, it sounds like a Fidelity fund or something. Is that all I need, or do I need to get VU? So I know what VU is. VU is the S&P 500. He said, I'm a knob, NOOB. I don't know what NOOB is, but it sounds like he's asking, hey, should I get a total market fund, S&P 500?
First of all, just in general, from a general standpoint, stay away from total market anything. It maybe there's one or two things you could do that. I generally like exchange traded funds over mutual funds, because they usually have a fixed portfolio, so you know what they're investing in.
Very passive.
Whereas with the funds are driven by transactions, people buying and people taking money out of the funds, putting money into the funds. A lot of the giant mutual funds that you see out there, there's only about 100 stocks they can buy anyway, and they all own the same stocks. They all own Facebook. They all own Amazon. They all own Apple. They all own like the FANG stocks or whatever they used to call it. Right. And the problem I have with all those stocks is if everybody owns them, the only thing they can do now left is sell them. There's nobody left to buy them anymore. So I'm not it's just a general. Wall Street likes to push this diversification thing. And I think it's like, first of all, in a lot of stuff, you're not nearly as diversified as you think you are. You probably have 5 mutual funds and their 10 biggest holdings are all the same in every fund. So you're not diversified right there.
I even think the Dow, if I'm not mistaken, I know the Dow, I know Apple is in the NASDAQ, but I think Apple is in the Dow as well.
Yes.
So even if
you have an S&P 500 fund, the 10 biggest stocks are 98% of the entire move of that entire index. So if you have like Microsoft, Qualcomm, Apple, whatever the 10 biggest stocks are, that's the whole index. Like that's really it's not as diversified as you think. So I think a lot of people like with an exchange traded fund, and you say it owns these 10 blockchain stocks, it owns these 10 oil stocks. That's a great way to get exposure to something. The other thing is for newer investors, the old fashioned don't try to be smart. Just do what you're supposed to do. You read all those books. What do they tell you? Put money away every month. Forget about it. Don't even look at it. Just
a newbie. You say he's a newbie, and he's looking at. I see you another bear. So he got blocked by Jim Cramer. That's funny. But someone said he got blocked by Jim Cramer for trolling. So and this person said, "Hey, I'm a baby." He said, "Hey, I'm a new person. Should I get a total market fund? Should I get a?" It sounds
if you're new, you might want to start with like an S&P fund and then just make regular investments. And do not look at the market. Do not read the paper. Do not watch Jim Cramer. Do not put on CNBC. The important thing is get your money in that fund every single month, no matter what happens. It is a bill. Don't think of it as money you're going to spend in the future. It is a bill you have to pay, like your electric bill. Just put the money in there. First thing, before you do anything, put your savings away right away. And if you do that over a 20-year period, you will have money. That's how most ordinary people end up with money when they retire. Just regular reinvestment and just doing it steady, and not every time the market goes down, you panic and stop or whatever. Like, don't do that. Just ignore it. Forget all about it. Don't even look at it. Just put it away. And you know what? It's like a watch pot never boils.
Mm-hmm.
Don't keep lifting up the pot to see if the water's boiling. Just leave it alone. It will get there. And yeah, you're going to have good years. You're going to have bad years. You're going to have good months. You're going to have bad months. Just remember, when the fund goes down, if you're putting, say, $500 a month away in that fund, you're buying a lot more of it when the fund's down. Now, when the fund goes up, you made money, but you're buying a lot less of it. So sometimes you want to like all those things, stock repurchase plans. Now there's all kinds of stuff. Like when I first started, it was a lot of this stuff was a lot harder to do. So, but there's a lot of options now. And the big thing is just regular reinvestment over and over and over again. I can't emphasize that enough. Forget about being Warren Buffett. Forget about all these guys on TV or all those videos on YouTube about how you're going to get rich overnight if you do this and that and trade options and all this stuff. Don't forget all that stuff.
Okay. So with that being said, you was drawing the line from Charles Ponzi,
right,
which we know is quote unquote the Ponzi scheme.
Right.
How were you drawing that line to cryptocurrency?
Because crypto is like the index of fiscal irresponsibility. I think that's the best way to say it. So as long as we behave in a way where we're just printing money and throwing it all over the place, Bitcoin's going to go up and up and up. Maybe it will go to 100, but oil is going to probably go up as much and a lot less to worry about. Because by the time they start talking about it, it's going to be $80, $90 a barrel. That gas is going to be $5 a gallon at the pump. And suddenly everybody's going to start screaming about it. They're going to blame it on Trump, of course. And then they're going to, of course, you always blame it on the other guy, right? It has nothing to do with anything. New Jersey raised the taxes on gas by like 40 cents a gallon. And they're blaming it on Trump. It's Trump's fault they had to raise taxes on the gas. And I'm not just trying to pick on who's there now. That's how politics works. You always blame that guy who was just there for everything you do wrong. Yeah.
I like what another bear said. He said, crypto being the index of irresponsibility is an interesting idea.
Yeah, because and I'm not trying to bet. Don't get me wrong. I am not bashing crypto. When I came on here originally, I was very cold to the idea. And unlike Jim Cramer, I will admit when I am wrong.
You call it Bitcoin.
Right. And I will go right back to the lion's den and take the heat. And everybody's going to go, you called it Bitcoin, and you said it was like Amway, that's my favorite. It's like Amway. I forgot about that. That was like a line from the old days. It's like
I should have loaded up the clip and played it. That's probably, I don't know, 2 years ago when Bitcoin, cryptocurrency, I wasn't a fan either,
Right.
It didn't make sense. I still to this day, it's a speculative move. I mean, I got $1,000 over there, and I just, hey, whatever, I just look at it almost like a crap table, but I believe it's here to stay in some type of capacity. I don't know what type of capacity it is, but it will be here to stay. But do you look at our current financial plan as far as throwing out stimulus checks and lowering interest rates? Do you look at that as financial irresponsibility?
Well, they're not really low. Interest rates are actually going up. They're not lowering interest rates. Interest rates are low to start out with. They're starting to creep. If you look at the bond market is almost in a, I would say, borderline panic. If it wasn't for politics, the bond prices would be in the 80s. We used to call them bond vigilantes. When the U.S. government would start borrowing or spending too much money, the bond market would get crashed. Like the yields would go way up. There used to be a lot of really aggressive people who
what makes that happen?
Well, because there's a certain, credit works like there's a demand for money. So there's a certain amount of money to go around. And if I have $100 and I have it in my pocket, and you come to me and say, let me borrow it, and I'll give you 5%. And then your son, Wesley, who's like a sharp investor, he goes, I'm going to give you 5.5%. So I lend all the money to Wesley, not you, because I'm going to make more money. And because now normally what happens is I might have $100 and there's demand, say, for 20 of that dollars. So I have a certain amount in reserve, or I have a certain amount of money that's maybe not being put to use right away. But as governments ratchet up the debt, and you know what, a lot of this talk about debt, like we've had massive amounts of debt. Like after World War II, the U.S. had massive amounts of debt, but we had this booming economy, and we weren't exporting industries to other countries like we're kind of doing now. It was different. I would say that the bond market has been sleepy for a long time, and I think people forgot how. Bond traders have forgot how to really. It used to be like in the 80s and in the early 90s, the bond market was really wild because it was there were big spreads on the bonds because of different interest rates. Different asset classes had significantly higher or lower rates depending on your credit quality. Now, when interest rates are down to like 0.5%, 2%, the only people paying high interest rates are like credit card customers. People who use credit cards, they're paying like crazy, and student loans, stuff like that. Some consumer credit is really high, but the rest of the entire industry, like rates are still, I would say, below the long-term mean. Like if the long-term mean in the U.S. is like 4.5%, 5%, we're like way below that still. And you have to get over that before it starts to really impact things. You got to start climbing, and it wouldn't surprise me if that starts to happen. Interest rates also go up when there's more risk. So if we start having wars all over the place, or crazy stuff happens, like people break into the Capitol wearing Viking helmets, maybe. I'm sorry, you gotta love it though. I'm thinking a guy took 14 years, hijacked 4 planes and crashed them into the World Trade Center, and his people got to be sitting around going, if we would have dressed up like Vikings, we might have been able to walk right in the Capitol building and blow the whole place up, and nobody would have been the wiser for it.
And the whole thing is ready. I believe the only thing that's holding us is the United States military. I think if our military was to falter, I think that our inflation would turn to Germany overnight.
It's probably the one institution in the entire country that people actually have at least some faith in. Whereas, let's face it, the politicians believe their own BS, but nobody else does. And it's like I always say, if you believe what you see on TV, on most of the news, and what most of the politicians are saying, you're one of those people. When you go to a strip club, you believe the strippers like you. Right? I mean, that's or like if you watch old Bugs Bunny things, I have a bridge in Brooklyn I can sell you. You want to buy a bridge in Brooklyn? I have a really nice bridge for you. Just to get back a little bit to blockchain, because it again, originally I thought it was kind of an interesting technology, but I wasn't sure how these trading crypto really coordinated with it. I do think blockchain technology is here to stay, and I think it's going to revolutionize pretty much everything, and make a lot of trust functions in society, like things the government does, maybe things a lot of banks do, are just going to disappear. So I think that is a whole separate set of things. But again, that's more of a long-term thing. Although as Bitcoin goes up and up, and that fiscal irresponsibility index gets higher and higher, the push towards like what they call fintech or just all this blockchain is going to go faster and faster, because I can trust the blockchain, whereas I can't trust my local motor vehicle office. I can't trust the newspapers. I can't trust anybody. I can't even trust my sports teams to try to like actually win, not like roll over. And you can tell I used to be a Jets fan. No, I'm kidding. Right. But like you know, you don't have faith in that they're really doing stuff. Whereas blockchain eliminates the trust gap between things.
Now, I will say this is something that I agree with you with. I can see. When you told me, you said, Prince, I want to come on. I want to talk about, everybody's laughing about what you said about, I think it's about the strippers. You think the strippers love you or whatever. It's a nice analogy. LK Ross said, I'm late to the party, but I have some Bitcoin. You can cash out. Now, I do believe I can see where your analogy is going, where you're saying green energy, alternative energy. Right, I'm traditionally in. You're saying, hey, that's more long term, but you're saying right here, short term, you have a lot of pent up transportation that's about to explode.
Right, it's like a tidal wave of demand is going to hit us, like a huge tsunami of demand is hitting us.
Short term oil, long term,
right. In the long term, we might be, you know, I still think we're kind of like, if you're familiar with Don Quixote, like we're still going to be charging out windmills a little bit. It was like it's a famous book that they made a Broadway show called Man of La Mancha. And actually there's a movie that's probably not that good, but the movie's decent, if you don't know any better, it's a good movie. And it's got some nice music in it if you like that kind of music. And but it was a guy was
we can use blockchain to vote.
Wait, what's that?
We can use blockchain to vote.
Oh, you know what? That would be awesome. We can use it for real estate transactions. It would be fantastic for voting. If everybody have a key, and it would be really easy to do, like your Cash App. It would be right on your phone or right in your computer somewhere. And when you went to vote, then you were immediately identified, but yet the system could identify you, but you wouldn't have to share your identity with anybody. So no one would know who voted, but the system would know that you're really a real voter and you can vote where you're voting.
But you know, whoever loses is going to say, "Man, this is some bull crap."
Well, I think I don't want to get you in trouble, so I'm gonna avoid that topic totally. But because I tell you, I've been around a long time, so I've seen them come and I've seen them go. And when you survive things like the '87 crash or like 9/11, and you get to talk about it later on, you get a very cynical view of a lot of stuff, and I do think there's some oddities that are
going on.
Yeah, and definitely need to be addressed, like fences around the Capitol building and things like that are just not quite proper, I think, to say the least, for a civilized country. Having traveled a lot into sort of what we used to call third world countries, and I've been in a country where the government was overthrown. I've been in places where all the banks were shut down. Those are the kind of things you see in those kind of countries. So it doesn't instill confidence.
Okay. Now I want to ask you, because before we got to get out of here, what you want to leave us with? I know you drew that chain from. I like the way you've coined that. I'm probably going to steal that. The Bitcoin or cryptocurrency is the index of irresponsibility. I definitely like that. And you was drawing that line between Charles Ponzi. I think he came out in the 20s. I think he was out.
Yeah, but he was born earlier than that. But it was like he was famous, and I think when he got out of jail, he went to Florida and did real estate swindles. Like he was one of those. He was like one of the first people to do those fake land deals, where you're selling land and stuff like that. That was another thing he invented. So he was very clever.
I like that. I like that analogy where you're saying, long story short, you believe oil is short term, green energy is long term, because you're saying, hey, we don't have the infrastructure yet.
If it really can do it. See, my main issue with green energy, and if you've been around for a long time, you're going to think this right away, is how many windmills do we need to replace one coal-fired power plant? And if we needed 100 windmills, where would we put them all? Like, where are they going to go? And
you're saying it's good in theory, it's just not practical.
Right. That's where I think on certain levels, a lot of this stuff, like the LED light bulb, was a great. Remote work is a great idea. Like it works. It saves energy. It lowers your carbon footprint if you're worried about stuff like that. It does a lot of stuff like it. There's lifestyle changes are right there. And I think those things are going to do a lot more than putting solar panels in New Jersey, where you only have one out of every 6 days is sunny. So it just doesn't, and if you go to a place like Arizona where you have a lot more sun, how are you going to get that power to places that need it? And then what happens if it rains for a couple of days? Like you could say, well, we can store it, but how good can you really store it? Like there's a lot of like sensible, practical issues, and because it's a political hot potato, it's like green energy, right? I'm for it. It's like it's without really thinking about what that really means.
Okay, so it'd be safe to say, in my situation of oil is practical, green energy is theoretical.
Yeah. Well, like as you keep pointing out, we don't have the infrastructure. And then what does that infrastructure mean? Again, how many windmills? How many solar panels? How much land are all that solar panels going to take up? Like,
especially for some place like New York City, that's little place, they have little space, but a whole lot of people using power. Where does all that power come from?
Right.
If you use solar, where's it going to come from?
If you put solar panels on the roof of every single tall building in New York, is that really going to generate the power? Run those elevators up those 100-story buildings?
Yeah, y'all the only place that got like 10,000 floors.
Right.
Okay, I can see it. I can see that.
This is the crux. It's like suddenly everything was closed. We were locked in our closet. Now the closet door's open. Everybody's running around going crazy. And that is rolling like a big snowball. And it's that's why it's like a wave of demand is hitting us. And yet we're short on supply on oil as it is. And we just don't have the alternatives are not there to pick up the slack, as you saw in Texas or other, like, I mean, if Texas has a blackout, like the idea of that is so unbelievable. It would be like if Saudi Arabia said we don't have any oil for gas stations. Like you'd be like, what? How is that possible? The whole country's a big oil well. But there's more to it than just getting it out of the ground. There's this whole infrastructure and like. It's there's a lot to it, and I think there's a lot of hostility in the Middle East now because the current administration is far more friendly to Iran, or at least wants to talk to Iran. Mm-hmm. And from what I see, the rest of the Middle East is not particularly friendly to Iran and not really interested. Views Iran as a troublemaker. Okay. And I think there's, you have people like Saudi Arabia, and Saudi Arabia has the ability to say, oh, we need a little more oil. Let's just turn the switch up a little bit. They can actually sort of do that. They can almost pump more on, the king can just sit there and go, bring me the button and press the magic button. And like, we're making more oil,
It's that OPEC deal that I always kind of hear about. Yeah. But I wanted to, got to wrap this up. Got to get running here soon. What I wanted to say, is there anything you want to leave out there for the audience? We have another bear gamer. He says that he feels as though the barrier to Bitcoin, in my opinion, is the ease of transactions. A lot of people don't accept it. I think it's becoming more accessible. I do like the idea of using it as a blockchain to vote. So how people can follow you, how people can come to New York and see you, tell us all about you, all that good stuff.
Well, if you want to find me, I mean, I'm not famous like Prince, so I do have these little. You can look me up on. If you go, I have a Facebook page called Unofficial Wallstreet, and from there you can find videos I do. They're usually really short. They're called the Wallstreet Minute. We're not really doing tours yet. We're sort of waiting for I would say if Broadway comes back in, then I know there's enough tourists in New York to make tours kind of worthwhile. But right now, I'm sort of waiting to see what happens with ever going back to doing tours again in New York. And so you can find me on that unofficial Wall Street page. Say hello, look at the page, subscribe to the videos. Like I said, I don't recommend stocks anymore. I look at sectors in the economy, and I just find the market fascinating and market history fascinating, and I find technology fascinating. So if you want to like talk about any of those things, just don't send me an email and go, what 5 stocks do I buy now that I'm going to be rich? And I get them. People are like, because I'm the guy, I bought Qualcomm in 1993, so it's going to be on my gravestone. I bought Qualcomm in 1993. And I held it the whole 90s. So it was the stock of the decade. So, and I was in right at the beginning on that one. So that's what I'm looking for the next. One more. I want to have one more on my gravestone.
One more? Okay.
One more something else. I had Qualcomm on the top, and then I want one more under there. So I'm looking for the next big one.
How much was Qualcomm when you brought it?
Oh, well, adjusted for all the splits, I own it at 3 cents a share.
3 cents?
Yeah. Well, it split like 30 times. I mean, it did 5-for-1 splits, 4-for-1 splits, 2-for-1, 3-for-1 split. I mean, that thing was it was like a tsunami that went like 9 years. It was just like a rocket ship, and it would trade up and down like 50% in one day. It was insane. But they had a certain there was some stuff that they had they were just way ahead of. They had certain technologies that were really ahead of the game. Mm-hmm. And it was just the stock to buy. And I had watched it for a while, and then I bought a little bit of it, and then it did a weird thing it never did before. And I just like mortgaged the house and bet the ranch on it. And that was it. And if it didn't work, I'd still be in jail.
Still
be in jail. I wouldn't be on your show. I'd be in jail. You think? I mean, like some of those other. So who's that guy that like the criminal? Or who's the guy who had the movie the
Wolf of Wall Street?
Yeah, some of those guys you have on the show sometimes are a little sketchy, right? Like I'd be out here with an orange jumpsuit on, and I'm hanging out with Bernie Madoff today, and like we're in the yard and we're hanging out with Bernie Madoff. Interviews from prison.
Well, James, as always, it's a pleasure to have you on. Definitely, I know you'll be back on. Definitely thank you for everything. Definitely thank you for your insight and, enlighten me on that long-term and short-term in the energy sector. So I think that's very interesting. So definitely going to keep an eye out, James. And until the next time, James, we will catch you on the flip side.
Absolutely.
Right? Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace, be safe. I'm out, and thank you.